The government is changing the way they fund apprenticeships in England. Education and training is a devolved policy, which means that authorities in each of the UK nations manage their own apprenticeship programmes. This video will cover how apprenticeship funding in England is changing. The levy is a compulsory payroll tax. Some employers will be required to contribute to a new apprenticeship levy, and there will be changes to the funding of apprenticeship training for all employers. The Apprenticeship Levy will fund new apprenticeships from April of next year. This levy will increase the annual spend on apprenticeships to £2.5 billion a year. This forms part of the government's promise of 3 million apprentices by 2020 and will help provide valuable skills and training. Companies with an annual pay bill of more than £3 million will be required to pay the levy. If you're an employer in any sector with an annual pay bill of more than £3 million, you'll be required to pay the levy. However, you will be able to benefit from the levy by taking on and training apprentices. Not everyone will be required to pay the levy. If your pay bill is under £3 million, you won't need to pay. However, these apprenticeship reforms will still affect you. When the new funding system begins in April 2017, you can choose the training you'd like your apprentices to receive through an approved training provider like us. The government will contribute to the cost of this. If you do not pay the levy, you won't need to use the digital apprenticeship service to pay for apprenticeship training and assessment until at least 2018. The levy is calculated at 0.5% of your annual pay bill if it's over £3 million a year. I will clarify how this is worked out. Your pay bill is based on the total amount of earnings subject to Class 1 secondary national insurance contributions. Although earnings below the secondary threshold are not counted when calculating an employer's national insurance contributions, they will be included for the purposes of calculating the amount of levy you need to pay. Earnings include any remuneration or profit coming from employment, such as wages, bonuses, commissions, and pension contributions that you pay national insurance contributions on. The levy won't be charged on other payments, such as benefits in kind, subject to Class 1A NICs. You will have an allowance of £15,000 per year. This is to offset against the levy that you must pay. This means you'll only pay the levy if your pay bill exceeds £3 million in a given year. This is because 0.5% of £3 million is £15,000. So to recap, levy-paying employers will pay the levy on their entire pay bill at a rate of 0.5%. However, there will be a levy allowance of £15,000 to offset against this. The levy allowance will operate on a monthly basis and will accumulate throughout the year. This means you'll have an allowance of £1,250 per month. Any unused allowance will be carried from one month to the next. For example, if your levy liability in month 1 is £1,000, you'll not pay the levy and your month 2 allowance will be £1,500. If you have multiple pay-as-you-earn schemes and do not use the full £15,000 allowance, you'll be able to offset the unused amount against another one of your schemes once the tax year has ended. The levy is paid to HMRC through the pay-as-you-earn process alongside any other taxes and national insurance contributions. If you belong to a group of connected employers, you'll be able to collect your funds together into one digital account. Your group will do this by registering to have multiple pay-as-you-earn schemes attached to a single digital account. Your group will only be able to use one £15,000 allowance. And the definition of connected companies and charities is the same one as used with the employment allowance. I'll now talk through a couple of examples to show how the levy will be calculated. Example 1 is of someone who will be required to pay the levy. Their annual pay bill is £5 million. The levy sum would be £25,000 because 0.5% of the £5 million is £25,000, and subtracting the levy allowance, the annual levy payment is £10,000. And the second example is an employer with an annual pay bill of £2 million. The levy sum would be £10,000 because 0.5% of their pay bill is £10,000. Because the levy allowance is more than this, their annual levy payment is £0. You can also use our online calculator to work out what your business will need to pay. Once you have paid the levy to HMRC, you'll be able to access funding for apprenticeships through a new digital apprenticeship service account. You'll be able to use this to pay for training and assessment for apprentices in England. The service will also help you find training providers to help you develop and deliver your apprenticeship programme. Separate arrangements will be in place in Scotland, Wales and Northern Ireland. For more information about these, visit the relevant government websites. If you are required to pay the levy, you'll benefit by taking on an apprentice. The funds will expire 18 months after they enter your digital account unless you spend them on apprenticeship training. Therefore, it makes sense to spend them on training. The government will also offer a 10% top-up to the funds in your digital account. That means for every £1 that enters your account, you will get £1.10 to spend on apprenticeship training. Therefore, you will get more out than you're putting in. To minimise the amount of expired funds, the account will work on a first in, first out basis, through either payment or expiry. Whenever a payment is taken from your digital account, it will automatically use the funds that entered your account first. Any top-ups on your digital account will also expire. For example, funds entering your account in September 2017 will expire in March 2019. Money is spent when it leaves your digital account as a payment to your training provider. There are many reasons that your business should recruit an apprentice. In fact, almost all employers who have taken on an apprentice have seen many benefits to their business. 72% of businesses report improved productivity as a result of employing an apprentice. 75% of employers say their apprenticeship program has helped cut recruitment costs. 80% state apprenticeships will play a greater role in future recruitment, leading to reduced staff turnover, fewer skilled-related vacancies, and lower recruitment costs. What's more, 81% of consumers prefer companies who take on apprentices, so you may also notice an improved brand image and greater customer satisfaction. As part of these changes, you'll now be required to choose a training provider like us. You'll need to be working with an approved training provider, whether you're spending funds in your digital account or accessing funding through co-investment. If you agree to buy apprenticeship training through us, once the apprenticeship has started, monthly payments will automatically be taken from your digital account and sent to us. The cost will be spread over the lifetime of the apprenticeship. When you buy apprenticeship training through the apprenticeship service, you don't need to have enough funds in your account to cover the entire cost of the training at the start. As payments are taken from the account monthly, you just need to have enough funds in your digital account to cover the monthly cost of each apprenticeship you have chosen. You will see funds entering your digital account each month as you pay the levy, each month as you pay for training. The government will then get the payments to us. In April 2017, these payments will be made monthly. The government have plans to give more flexibility over the way payments leave your digital account. If your annual pay bill is under £3 million, then you will not be required to pay the levy. When the new funding system begins in April 2017, you will still need to choose an approved training provider like Positive Outcomes and choose the training you'd like your apprentices to receive. When we've agreed on a price for the training and assessment of your apprentices, you will pay this through co-investment with the government. This means that both you and the government pay towards the cost of the training. The government will ask you to make a contribution to the cost of the training, and they will pay the rest, up to the maximum amount of funding available for that apprenticeship. This will be paid directly to the provider, and you will be able to spread it over the lifetime of the apprenticeship. The government had said we'd have more information in June, but with the referendum, this has been postponed. Why Positive Outcomes? We are a national apprenticeship college specialising in apprenticeships, work-based learning and corporate training. We were founded in 1996 in the East Midlands, and we're proud to have now been operating nationwide for 20 years. We're in the top 40 hub for the Skills Funding Agency and have been recognised as one of the largest providers in the country. Over the last 20 years, we've received a variety of awards and accreditations. In our Ofsted report from March 2013, we were given Grade 2 Good and are very proud of the quality training we provide to our learners. As a company, we are committed to investing in and developing our staff. We are proud to have received very encouraging feedback in our recent Investors in People inspection, where our excellent training and development culture was recognised. We are accredited with the Matrix Standard, a national quality framework that applies to all organisations delivering information, advice and guidance. We are also very proud to have been given the title of a Best Company. But what about Brexit and the recent referendum result? It is understandable that there is some uncertainty at the moment. In the run-up to the referendum, Skills Minister Nick Bowles warned that Brexit could actually kill off the plans. He asked, "Do you think the Chancellor will feel it prudent to introduce a new payroll tax in the middle of a recession when business confidence has been shattered by a decision to leave the single market and unemployment is rising?" Since then, Mark Daw, Chief Executive of the Association of Employment and Learning Providers, said, "We need clarity on what we're meant to be doing. I can understand they'll pause for a moment and think, but if they don't know what's going to happen, it's going to by default not happen in April." However, despite the uncertainty, Nick Bowles has since said that we should continue to work on the basis that the Apprenticeship Levy is coming in April of 2017 as planned and in the way it was planned. He went on to say that the need for investment in skills development will be even more urgent and more important for a United Kingdom that is outside of the European Union. As soon as more information is made available, we will of course share it with you. We had expected to receive more information in June, however, recent events have meant that was delayed. We're expecting to get that information in the coming weeks. In October, there will be information about the final levels of funding, government support, 16 to 18 payments, and English and Maths payments for apprentices starting in April. We're also expecting full draft funding and eligibility rules, and we will also receive more information on employers who operate in England and other parts of the UK. We're expecting the government to work out what proportion of their pay bill is paid based on the percentage of employers living in England. The government are testing the accuracy and suitability of this approach and will provide more details in October. In December, we will receive the final detailed funding and eligibility rules, along with further employment guidance from HMRC on how to calculate and pay the Apprenticeship Levy. Thank you very much for watching our Apprenticeship Levy video. If you have any questions, please do not hesitate to email us on levy@positiveoutcomes.org.uk and make sure you're following us on Facebook and Twitter for the latest updates. And if you already work with apprentices, then we would love to hear from you. Please take a moment to complete our short survey.